So how do you see European economy this year?
Well, first of all, good morning, and it's very nice to be with the group, and I'm delighted that Kristalina is my successor. I have to say it was tempting to go along some of the communications that she had because it was my life. So now I have to focus on a slightly narrower field, which is, essentially the European Union, and more specifically the 19 members of the euro area, which has the benefit of sharing one single currency, the euro. So when I look at that part of the world, I see some positive signs, and I see some concerning signs as well. In the positive, I look at the employment numbers and the unemployment numbers, just like Stephen. We never had such good employment numbers. We're certainly back to the pre-crisis times. When I look at the wage increase, we are roughly on average at about 2.5% wage increase, which is, for a central banker like Haruiko and myself, it's, we are happy with that because hopefully there will be a transmission channel to prices, which in turn would generate inflation, which would certainly make our life much easier in many respects and give us room to fight the next shock when there is one. What we're not seeing, so I told you I would give sort of good news, bad news, we're not seeing that transmission yet. We're not giving up on that, but to the extent that wages continue to grow, which will fuel consumption, which increase cost for companies, that will somehow be reflected in prices. Unless we're talking about a competitive landscape that is such that prices increases are just out of the equation, which would seem a little bit strange, frankly. So we're waiting for the transmission channel to be reflected into prices. That's the sort of good news, bad news. Also, reasonably good news is, the fretting of trade. We're seeing a bit more of that. Trade has historically recently been dramatically low and did not fuel growth very much. We are delighted to see trade agreements or truces being negotiated and concluded because we believe that it will remove uncertainty the world over. I think the distribution of the benefits and costs as a result of trade diversion remains to be seen because it's not going to be a win-all arrangement. There will be some downside effects, and we certainly at the European Central Bank are measuring where the chips will fall and who will lose out of that rediversion under the various agreements. So employment positive, trade slightly positive, what we call the downside risks, which weighs on our economies, I would say probably less pronounced because of what has been resolved between the US and its partners, because uncertainty has abated a bit. Brexit is a little bit less uncertain, but we still have those possible cliff edge in December of 2020. We don't know exactly what the trade relationship will be, and it's a big partner for the euro area, so that's certainly a question mark. One more number that I'll give you, Min, is on the composite PMI, which is essentially how much manufacturing output, how much service output. You blend them together. The euro area is in positive territory, and what we're seeing is service, construction holding strongly, and manufacturing still down and below 50, which is the sort of threshold at which things are balanced. But the forward numbers, in other words, when you ask companies whether they believe that there will be manufacturing activities, that's slightly on the uptick. So that's also a good phenomenon. And we are seeing inflation moving a teeny tiny little bit, but this is really minor. And it would take a lot more for, it would take much higher numbers to actually change the picture fundamentally.